Well, joining me now with more on the markets from Chicago is Eddie Yoon, founder of EddieWouldGrow and co-founder of Category Pirates. Eddie has more to share, certainly, on this market, the economy, and where we head from here. Eddie, it's great to have you on the show this morning. And what do you make of the market action?
Thanks, Kristen, for having me on. I think it is a bit of a toss-up. I think the U.S. government, we're playing multiple hands of Texas Hold'em at the same time, and that's part of the complexity with it. I think the macro consumer data going into all of this tariff turmoil was actually fairly good. Consumer personal expenditures are up in February over being down in January. Disposable personal income is up higher than it was in January. So those signs are good, but personal savings rates have also increased. So the consumer is probably also taking a step back. Now, what we're kind of looking at is going to be a few months of what I would call dirty data. It's going to be hard to know precisely what's going on. I think the consumer would be positive if there was more certainty, but they're going to pull back. But it's going to look like a bit of a pandemic level pandemonium at some level, because what you are seeing, as you mentioned, we expect consumers to spend more in the near term, stocking up ahead of tariffs and price increases with that. And so you'll probably see some data in the near term popping up, and maybe inflation ticks up a little bit as people are buying. But then what's going to happen is companies are going to pull back on inventory, investing until they kind of know what's going on. And that's going to create a set of supply and demand mismatches that's going to just cause a lot of wackiness in the system, much like COVID, where people bought up all the stuff, then there was nothing to buy, and then people overproduced, and then there was too much to buy. So we're going to go through a similar cycle like that again.
Interesting, Eddie. Now, in terms of what this means, the inflation data this morning, we did see producer prices actually decline. So we saw a decrease in the pace of prices month over month in this latest business inflation report. What was behind that? Anything more other than a pretty significant drop in energy prices?
Yeah, no, I think certainly, as you're seeing, it's just kind of the steady state that things have been on, where inflation, we're just kind of getting past the weirdo kind of comps that we've had over the last few years. And so I think that, remember, the percentages are versus year over year. And so we've had a more stable 2024, and going into 25, it was going to be more of the same, where I think prices were going to come down in general. Certainly there are certain sectors, energy, as you said, is improving. Insurance and car insurance in particular, I don't know when that's going to improve, just because of the actuarial noise has to get through with homeowners insurance having gone up significantly in auto insurance. And so I suspect that the steady state would have been 2%, 3% in that range. But again, there's going to be kind of weirdness in the system, as you can, travel data has been kind of funky. So TSA passengers is down 5% month to date, year over year, and after a month down in March. International travel to the U.S. is down significantly, actually. Forward bookings down 11, 12%, including significant decreases in travel from Canada and Mexico, probably reflecting some of the rhetoric that's been going on.
Interesting. Now, what can we glean from the bank reports this morning? They did exceed expectations. We know for the biggest banks, increases in trading volume certainly will be a boost, but banks can give us a sense as to the state of the economy as well.
Yeah, no, I think what you're going to see is probably some positive tailwinds for banks as consumers hoard more cash and kind of keep that money on the sidelines. So retail deposits will go up. That'll improve lending opportunities on the balance sheet there. However, on the other side of the banks, you're going to see, I think, just some odd noise from a stock trading perspective, as earnings are going to be coming out. CEOs are going to be less likely to give forward guidance or pull back or give a wider range, just because they don't know what to expect. I mean, we've already seen it with the airlines that have called down their Q1 numbers, as they have seen kind of DOGE-related impacts as government travel has really pulled back. That'll be followed by consumer travel. And so what we're kind of seeing is the economy writ large has been propped up by two super consumers. One is the government, and that's kind of under question as, again, DOGE continues to pull back fraud, waste, and abuse. And the second one has been the top 10% of spenders have been driving 80% of the discretionary spending going on here. And so those consumers are also going to pull back, not because they can't, but because they're not certain of what they're getting for their dollars. So it's less an affordability issue and more of a, is the supply going to be there? Am I paying more for the same things? Or because consumers don't mind paying more for new and different benefits, but they do not like paying more for the same old, same old.
What's your outlook from here, Eddie?
Well, I suspect that 2025 Q1, we'll see some of the early signs. Will probably have looked fairly good. Q2, I think, will be a lot rockier, and then the second half of the year will be a bit of a mixed bag, depending upon how long the uncertainty unfolds. I actually think we're kind of in a conundrum here, where 2025. You're going to see, I think, just because companies are going to not want to get over their skis, a pullback in spending, probably more layoffs related as AI continues to improve, and that's going to pull back on the consumer too. So I actually expect a weaker, rockier second half of 2025. And unfortunately, because the tariffs are taking months to unfold and to lock down, you're going to actually see this be a multi-year impact where 2025 is going to be funky, 2026 will be kind of an odd year from a comp perspective, and probably 2027 is when we'll kind of get back to what is the new normal.
All right, Eddie Yoon, founder of EddieWouldGrow and co-founder of Category Pirates. Eddie, thank you.